Crypto Twitter's been in a bit of a state lately with Blackrock. This video here by Heidi, I've put it in the description. Check it out. Really great level-headed video. Before we get into the Blackrock, because it's absolutely insane how Twitter is reacting, we'll provide a level head, but you need to watch this video if you haven't already seen it. Brad Sherman, 15 seconds. This is something to be excited about. Listen to what he has to say.
Is this the end of crypto in America?
Hope so, don't think so. But
you hope so?
Yes.
Why?
Well, you know, this is an investment network, and people might say, hey, it could go up, it could go down. The question is it good for America? And the answer is no.
Freedom, your choice, your money, your choice. Not good for America. That's hilarious. Anyway, I thought you'd enjoy that one. Before we get into Blackrock, you can see pretty down kind of day. A little bit of green, a little bit of red. Nothing's really going anywhere. Bitcoin sideways, 26,460. You can see we're just range bound at the moment. Checking out the banner bubbles. More red than green. Good to see Pepe down. Maybe it's a good opportunity to get into it. Maybe not. Let me know if you're still holding a bag of Pepe. What are your thoughts behind it? A little bit of fun. Now let's get over to the serious side. Blackrock is the world's largest investment institution. They're huge, they're global, and with that, a lot of people panic that them entering with Bitcoin with a spot ETF, they're going to manipulate it, they're going to destroy it. This is a big conspiracy to get rid of Bitcoin by the big government. I think, so I've gotten both sides of the argument here for you, where some people are saying it's good, some people are saying it's bad. I think we need to look at both sides. We'll race through this. I think this is the best thread. I did retweet it yesterday. So seeing a lot of stupid FUD over BlackRock's Bitcoin ETF filing. Shout out to Stony Chambers Asset Research. I've put this thread down below in the description as well. Credit where credit's due. This is great. Bottom line, it's not some conspiracy. BlackRock, they just want to make money. ETF fees are a lucrative business. Holding Bitcoin costs nothing and has no turnover. The profit margins are nearly 100% on this venture. The line about hard forking is a total red herring, so disregard. This is probably what crypto Twitter has latched onto the most. What if they chose to honor a hard fork that people dislike? It doesn't hurt Bitcoin, it hurts ETF investors who will sue. Lawsuit equals expensive equals bad for profit. Shareholders angry, get the idea. Number 4, why doesn't it hurt Bitcoin? Because Bitcoin is decentralized. Clearly, that's why we like it so much, why it's a commodity, not a security. So no single decision by anyone can hurt Bitcoin. It really is that simple. Bitcoin investors who say otherwise do not understand the thing they're invested in. Don't listen to them. Still with me? Okay, more. So number 5, does this mean BlackRock suddenly bullish on Bitcoin? No, they like the money that the ETF can generate. The asset BlackRock owns is really owned by fee-paying ETF investors. Yes, not your keys, not your blah blah, not your coins. In the real world, lawyers and courts can enforce ownership too. This will allow a lot of money, if it's approved, to flow into Bitcoin. In the Bitcoin community, we've wanted a spot ETF for years and years and years. BlackRock comes out, find a way to be able to get around it potentially. It hasn't come into place yet, but it most likely will because they're smart. They know how to work with the regulators. If they can get it in here, people are calling foul. No, we want a spot ETF, but we don't want BlackRock. It makes absolutely no sense. It's probably, whether you like BlackRock or not, probably a good place to have it. It's going to provide a lot of trust for the plebs out there that want to get into Bitcoin in an easy and accessible way. BlackRock has too much to lose to pull a silly ploy involving magic internet money because unlike Bitcoin, they are not decentralized and can be sued. A real FAFO moment. I've never heard of FAFO until yesterday reading this. Find out, fuck around. So what can you do? This is potentially an opportunity. I talk about that here. Goes on about other options there. Now, Simon Dixon, another very level-headed person in the space. This is pro. Then we'll get to maybe more of a negative Twitter thing because I do want to show you both sides. We'll sum it all up as well. Potential impact of the BlackRock ETF. Unit, the iShares filed paperwork, the SEC for the formation, spot traded ETF. Now, in the last 10 years, Bitcoin obtained a 73.29% compound annual return. 10 years prior to gold. When I said CGLD, C Gold, shout out to them. I'll bring them on as well. They're a gold-backed token, stablecoin, basically. They'll come on in about 2 weeks. We'll talk about that as well. 10 years prior to gold launch, gold compounded annual return were negative 386 and 94 to 332 and 04. So the SPDR Gold Shares ETF was listed on the New York Stock Exchange in 04 and later Hong Kong, Singapore and Tokyo. While the gold ETF had a notable impact on the price of gold, its influence was primarily indirect rather than direct. The ETF itself did not directly affect the supply and demand dynamics of physical gold. Instead, it acted as a reflection of market sentiment and investor activity. So basically here, since the ETF, the price of gold experienced a significant surge compared to historical values. Today, the SPDR Gold Shares ETF has a market cap of 58.56 billion, representing 4.5% of the entire 13 trillion gold market cap. Collectively, physical backed gold ETFs have emerged as the fourth largest holder of gold globally. Talks about who they're there. So ultimately, supply and demand economics is what drives Bitcoin cycles. If a Blackrock spot Bitcoin ETF is approved, it could potentially have a similar impact on Bitcoin market as the SPDR Gold Shares ETF had on the gold market. For me, and this is for me as well, I'll be holding my own keys, but pension funds and the vast majority of money, however, will hold an ETF, and they have been waiting for somebody with the reputation of BlackRock to make that happen. It's so funny that financial players, asset allocators like BlackRock, they trust BlackRock, and then we get into crypto and we're like, no, the biggest institutions, stay away from our Bitcoin, please don't wreck it. Not financial advice, but could mark a turning point ahead of the next halving cycle for Bitcoin. Pretty big stuff. Now, Chris Black, the other side of the argument, BlackRock runs first and largest Bitcoin ETF, becomes wildly successful, heavily funds Bitcoin development, proposes regulatory and eco-friendly proof-of-stake fork, loses community opinion but adopts fork as Bitcoin anyway, as do most governments, proof of workforce, fork just for pirates and El Salvador. Could it happen? Yes, of course. Anything is possible, and we need to look at both sides of the argument. We don't need to just put our head in the sand. If we can see every single attack vector that comes into Bitcoin, into crypto, whatever it is that you're invested in, and you can be level-headed, be like, that's the risk, that is possible. The likelihood of that happening, probably not going to happen. So I'd give that maybe a 3% chance, 90% chance, 97% chance that situation won't happen where they go proof of stake. Because that would destroy Bitcoin as it currently stands. But Bitcoin as itself, they can only hard fork. So Bitcoin as itself would just stay as it is and it'd probably have about the same adoption that it has at the moment. And then it'd take a long time for people to realize the point of it, hard money, the proof of work, blockchain. And we just need to start again, build that momentum back up again. That would be the way that I'd see it. So Carl B. Menger breaking BlackRock, and this is pretty crazy. So BlackRock's record of ETFs approved by the SEC, 575 to 1. Some people are calling it 575 to 2, where they won't get the Bitcoin spot ETF done. I don't think they want to just waste time putting in applications to do an ETF for trust. It's not the business they're in. They're in the business to make money. And with 575 to 1, it has got a very good chance of going through. We'll go into why this is a little bit different as well to everything else. I guess it's always very helpful to have high-ranking government friends that you can pay handsomely to make laws in your favor. The fiat system is a very disgusting place. It is what it is. And we'll get into how they're going to get around here. Adam, very bullish about BlackRock. People don't realize that BlackRock really made the gold market as we know it today. Pre-BlackRock, it was a 1 trillion market. Now it's about 13 trillion. How did they do it? You can see here, nice infographic. I've put that there. BlackRock has an army of advisors around the world who receive commission for purchasing or for pushing their products. And while they've got a lot of brands for their funds, they're most known for iShares, which offers 3 of the 5 largest gold ETFs in the world. 3, BlackRock has tools to let its advisors earn a 3% advisory fee on the products they sell, as well as to add on custom advisory fees. It's all about making money. If people can push Bitcoin and make money, they're going to do it. Is it good or bad? It is what it is. It's a player versus player game. For me, I won't be putting or buying any Bitcoin through an ETF. I buy it spot. I hold my keys, hold my coins. For most people to get exposure, for more people to get exposure to Bitcoin, whatever way they get into it, if they start learning about it, in my opinion, that's a good thing. A few more things here. I won't read every thread. Advisors eager to push the products and get commission on a new asset class began to tell boomers that gold was the perfect component to round out a portfolio and hedge against inflation and other risks. This led to a boom in gold investment demand, which is good. While much of the global demand for gold is still purpose-driven jewelry and tech, this pushed through the investment sector demand to almost 25%, which led to a second-order effect of increasing the amount of gold central banks were buying. That is really good to see. Obviously, talking about gold, collective finance, we'll get them on next week to talk about their gold-backed stablecoin. I believe it's over-collateralized. I always mess up that word, but it is. So, Will Clemente. This is really interesting. Will Clemente, what a smart young lad. Absolutely incredible. Pretty mind-boggling stats show just how scarce Bitcoin truly is. Here, there is now over 500,000 more Bitcoin that hasn't moved in at least 10 years than there is on exchanges. I thought that was pretty interesting. Now, BlackRock, every time I tried to hop onto this website, I'm here in Australia, it'd bring up this different website, blackrock.com/au. And instead of pictures of trees, there's this weird picture of people abseiling down. Now, they're trying to push across this image, ESG, whatever it is, whatever their agenda is. But at the end of the day, they are one of the largest firms in the entire world. They own most of the world. Them getting into Bitcoin is about money. Hold your keys and you don't need to worry about it. But it is a good thing for the space overall. It is bringing it more mainstream. And they're working with Coinbase as well, which is crazy. So Coinbase probably not going to get shut down, probably pretty safe there as well, because they're going to be the custody provider. So BlackRock, this is how they've gotten around it. Pretty exciting stuff. BlackRock may have found ways to get SEC approval for spot Bitcoin ETF, so included a surveillance sharing agreement. Nobody wants to hear this in crypto, especially in Bitcoin, which could eliminate the risk of market manipulation related to Bitcoin. It's really a nothing burger. Like, all of this is possible already. So they might stand a better chance than previous attempts by other fund managers because of a promise of a surveillance sharing agreement between exchanges. Surveillance sharing agreements allow for the sharing of information about market trading activity, clearing activity, and customer identification, allowing for little possibility of market manipulation. And that's why they keep shutting every single time someone's putting an application for it down, because they think the market is going to get manipulated. And we keep calling foul and saying fair game, let Bitcoin be Bitcoin. Maybe the regulators are just trying to protect normal investors. I know that's not the standard approach that everyone says, but maybe that's a more helpful way to think about it. Because until things change and places like this come in, if we keep thinking they're against us, it's us versus them, it's just a very unhealthy way to be able to approach life, what we're doing. And when BlackRock comes in, instead of being like, no, they're absolutely going to destroy it, how can this be good? Maybe it's bad, but just focusing on the positive side of things, this is going to allow the space to move forward, keep a very level head, and maybe drink spring water instead of tap water. Anyway, spot BTC SSA is what makes this application different, and not simply the company size as the largest asset manager in the world. The SEC is very concerned with market manipulation related to Bitcoin prices and cited this in almost, if not all, previous rejections. So at least they're consistent with their messaging, that they're concerned with market manipulation. Are they not? Maybe they truly are. The move comes after several other ETF proposals, including those of Grayscale, Van Eck, and Wisdom Tree, have previously been rejected. So it's not the same as Grayscale's product. It was funny, when I woke up and I looked out at the ocean this morning, everything was in Grayscale. It was absolutely amazing. I'd love to share a photo, but I don't want to dox my location that much. And then I don't know, I just had Grayscale stuck in my mind ever since. It was pretty impressive. While both are technically trusts, there's one key distinction. Obviously, sparked some confusion whether Blackrock was applying for an ETF or a trust with properties similar to the Grayscale Bitcoin Trust. We'll get into it. Technically, Blackrock's proposal is for a trust, but it's a trust that allows redemption, so it functions just like an ETF. So it's actually not an ETF, but it is like an ETF. It's in a trust. Going forward, it is just going to be referred to as an ETF because of the characteristics that it has. So it's nothing like GBTC, which has no redemption mechanism. The market has trust and it thinks it will be like GBTC with no redemptions, but that's not the case here. So the key distinction is that an ETF for spot Bitcoin would be able to buy Bitcoin at the end of the trading day to bring the fund's assets in line with its trading price. A trust does not have the ability to do this. A trust will thus occasionally trade higher or lower than the value of the underlying assets. So this is the issue facing GBTC, which has been changing hands at a wide discount, currently around 40%. This will get rid of that. It'll just be closer to spot price, and average will be back to spot. Grayscale has been attempting to convert its trust to a spot Bitcoin ETF for some time, but has been rejected in that effort by the SEC, which cited worry about market manipulation. Always worried about market manipulation. They say it so many times. Maybe it's true. Maybe it's not. Does it really matter what they actually believe or not? That's their messaging. That's how they've approached it. In regards to Grayscale, if BlackRock does get approved, then people are just going to follow suit, do what they do. Will Grayscale be able to transition into a spot Bitcoin ETF? Maybe a little bit complicated, but BlackRock may open up the way for it. And if the SEC approves everything all at once, instead of just Grayscale, but like ARK Invest and other institutions that want to come out, that would be better for the space overall. But if BlackRock's the number one, they're the number one. The way I see it is a good thing overall, because it's just going to allow money to come in. People are going to pump it for the commissions. That's on them. Why not? Everyone needs to make a living. And if they're pumping Bitcoin to make money, getting people introduced to the world's hardest money, the greatest savings technology in the entire world, who cares how they go about doing it? Because long term, if people get educated about Bitcoin, they're 100% better off than what they are now. So, breaking. New research finds Bitcoin mining is the most sustainable sector of the economy. Somebody has to fact check this. I'm not really sure where this energy has come from, but if it's true, this is absolutely insane. So percentage of sustainable energy, Bitcoin 52.6%, banking 39.2%. If this is true, this is a great argument for Bitcoin and the ESG. Industrial 32%, agriculture 19%, gold 12.8%, so about 4 times higher than gold, a little bit more. Iron and steel 9.8%, zinc, we're 52 times more sustainable than zinc. Pretty interesting. If that is true, we'll see. I'll look at it and go in there. So ladies and gentlemen, BlackRock, it's an interesting time in the space. They probably will get approval. I believe it takes about 240 days all up for the SEC to respond. BlackRock will probably be able to pull strings, make it happen earlier. Does this line up with the Bitcoin halving perfectly? Maybe. There's so many exciting things happening in the space, a lot of regulation around the world, and I understand we don't like regulation. We want to stay away from regulation. But long term, it will allow everybody to come into the space, to feel safe, secure. I know with Bitcoin, we want to change the system when we understand fiat, how bad that system is and how it enslaves everyone. We get all that. So what you can do is you can take custody of your Bitcoin. maybe buy a bit of gold, maybe a bit of silver, talk to Peter Schiff and find out the arguments for getting one or the other. And maybe get both. Who cares? Hedge your bets, have both of them. For me, definitely irresponsibly long on Bitcoin. But when you can take control of your coins and then people like BlackRock come in, flood it, but you've got control of it, price goes up, you're a sovereign individual, it all works out for the best. And you stay educated, stay up to date. Hong Kong coming into the mix. It is an absolutely wild time. Russia using it. So many things happening that are pro-Bitcoin all around the world. And the world's pretty happy with Bitcoin. So it's a very exciting time. Don't sleep on it. Definitely not financial advice, but if you haven't stacked any, maybe look into why you haven't already. Have a beautiful day. We'll see you tomorrow. Be blessed.